virtual 9:15 or so to give a more detailed review of the indices, sectors, etc. And so I'll just do it quick. You know, I'm going to always do it quickly. So I'm looking at spiders here. I'm sharing my screen. Bottom left daily, we had our red bar ignored. And then, you know, 2 days up. We don't know how deep we're going to get on this breakout into resistance. We're going to just keep watching it and trading smaller time frames until we get a reversal. But upper left here on my 15-minute chart, so we're gapping over the high, pulled in a little bit from the high, but still, you know, consolidating here pretty bullishly. So the trend is still up right now, daily and intraday. So a bullish bias again on pullbacks, which has been it's been my mode for, you know, the last couple of days. Let's look at opens, of course. Our the only problem child jumping out at me is this grub. Beautiful, beautiful, you know, breakout, wide range bar breakout yesterday, consolidation to rising 50. It was just a no-brainer play. We sold a 3-day out of the money put spread, and it's having a bearish gap here. Deep retracement, you know, it's bouncing around here. I don't know. We're just going to wait. Nothing to do, but I'm keeping my eye on that, obviously. I'll go through just a few opens real quick and then look at a number of gap plays. All right, our win. I said to close that at 4 cents if you could. It closed at 4 cents. So if you got filled, great. And if not, on today's gap up of $1, you should be able to close that if you want. You're closing it just for pennies. It expires Friday. So again, it's one of those trade your own plan, but just for peace of mind, so you don't have some disaster gap against you. That's just my style. Close it out at pennies. All right. FND down a little bit, but we're fine there. We're short the 55 puts way the heck down here that expire Friday. Because of the bullish daily, weekly, monthly, we'll take assignment if needed. It's pretty darn quiet here. Our opens are very CVX getting a 65-cent gap up on light volume though, so I don't know how real that is. XLE, we're still trying to, so we got a nice gap up here. Today might be the day to leg into these covered calls. XLE, XOP. I mean, that's a sign of strength. Look, for 1, 2, 3, 4, 5, 6 days, it has not been able to trade under a prior bar's low. And we're gapping up here again. I don't know if this big red bar sell-off is real or not. Yeah, see, you just got to be careful on light volume. So that's gapping up. I think a 30-minute low might be the ticket on legging into selling out of the money calls, either for Friday expiration or go out a week from Friday for 9-10 days. Let's look at some gap ideas and earnings. Look at this SPWR. Now it's gapping up here to $9.11, which on the daily, you know, I just eyeball it here. It's way the heck up here. So it's a beautiful gap breakout, but extended on this daily chart. But look at the monthly here in the upper right. What pattern is that? Frank, Patrick, Derek, Russell. All right, let me type it in here for you. Maybe you're getting your coffee. SPWR monthly is huge W formation. You know, double bottom W, but it's a retest. It's gone. It rallied up. It came back. it's building a base. And now we go down to a smaller time frame to get our entry. The weekly is, is a mess, but it's going to be gapping. It's going to be a breakout on the weekly chart also. So this I have as a core long for us on a nice intraday pullback. So that's going to be a nice watch for me today. And I have no clue what it's up on, and I don't care. All right, IBM, disaster du jour for the tech today. So it's at 152. You see here pre-market, kind of stabilizing. Now I go to my daily. I mark off where 152 is, and it's gapping right here to the 200-day moving average. There's absolutely no pattern there, and it's in the middle of congestion, but it might set up a beautiful credit spread up or down over a 30-minute higher low. If this thing can't bounce and it takes out a 30-minute low, I'll consider a bear call spread that expires Friday. And the reverse, if it has a bullish wide range bar on the 30-60-minute chart, which means the gap down's being bought aggressively, I'll look to sell a bull put credit spread that expires Friday. On this pattern, I'm not willing to go beyond Friday. LRCX is getting whacked. So it's gapping down to 202. I marked that off on my daily, and same thing. I mean, it's a gap, so it's a breakout failure of this bar, but it's gapping right into the middle of congestion, and it's just a watch. I don't know what it's going to do. Morgan Stanley had earnings. Sideways mess here, gapping up to 54.20. Mark it off, and I personally don't have any interest, or until it can take out this ugly red bar from 1, 2, 3 days ago. Because remember Goldman Sachs yesterday? Yuck. In the ETF, here's XLF. It's just lagging. These banks are lagging the broader markets. Abbott, ABT. Earnings, so 58.60, 58.60 here. It's still in a congestion. You got, wow, this is just on the weekly, a big fat sideways. You got resistance above, support below, but no compelling pattern. Have to wait. A number of semis down today. Here's AMAT, 56.20. Same thing, just gapping into congestion. ASML down $5, 207.40. Okay, ooh, this is okay. This is ugly. This might be a bear call credit spread because it's gapping under the low of this bullish wide range breakout bar. In this congestion on the daily, yes, it's 5 days of congestion. But if it takes out a 30-minute low, I think it's headed for this gap fill area, 200, low 200s. So that's going to be on my watch list here. See, I'm just trying to go through my hot list and interest list. Amazon from yesterday. Yeah, that's gapping up. We have a put spread. That looks good. Yeah, I'm not reviewing all open trades, just the problem childs and the ones worthy of comment. We were looking at CSX yesterday. Look at this big old gap up, 59. But to me, so it's a very, very, very bullish gap, but it's a little bit, it's excessive to me. But if we can get a nice, 15-minute buy setup or double bottom, we go to our intraday charts for entry. So CSX I like. Let me check earnings. Is that gapping up on earnings or something else? Earnings, yep, April 17th. So it was after the bell yesterday. All right. So the reason I like that better is for two reasons. And thanks, Pam. One is volatility is going to be higher. And number two, I don't have to worry about earnings for selling a put in the future for a while. So I'm happy that it's gapping up on earnings. USB, another bank. It's big fat mess, no interest. TXT, gapping up $4. This one I like. Well, see, here's the problem. If it were gapping up to say, under 62, then the gap wouldn't be excessive to me. Then I'd be looking for an intraday pullback. I got a bullish, look at this, multi-month consolidation here on the rising 20 on the weekly chart, strong uptrend on the monthly. Look at all these tails. So every time the sell-offs are getting bought, but it's gapping up to $64, which is off my chart. So even though I love the gap, it's excessive for me. So therefore, it's not a tier 1. Okay, yeah, thanks. ISRG, I saw that one going by. Gapping up to 458. Similar discussion. The gap's too big for me, but it's a bullish daily, weekly, monthly. So you can watch it on a pullback. VMW. I saw gap up 135.70. So now, it broke out yesterday from multi-month base. This bearish gap down was bought. I like the weekly. Not for directional, it's too sloppy for me, but on a pullback, VMW is a nice bottoming pattern that's broke out. So I like that one. I'm just putting VMW, I'm putting these in different lists. And let's see, Twitter from yesterday. If it can come back, to the low 31s and give us a bullish intraday, I'm not going to trade it over earnings, but I'll be looking to sell a out of the money put for Friday. CVNA that Greg mentioned yesterday, breakout to all-time highs. That's up. It's gapping up 90 cents or so. Remember, I was trying to sell some puts on this yesterday into the close and did not get filled. BMY, I guess, Greg mentioned it yesterday, and I'm going to watch this to see when it finally gets a bid. Because the, climactic sell setups like this make volatility go up. Let me check the implied volatility rank right now. Wow, it's strange. It's actually been falling. It's 68% implied volatility rank, but this is very strange. That's telling me that there was some high volatility news that came out, and that's why it was almost 100% right around this breakdown. But nevertheless, I love trading sell-offs when they stabilize. XLU, somebody mentioned yesterday. I'm going to keep an eye on it. some that Greg mentioned in the video last night. Monster here, bottoming pattern daily here, weekly getting into C legs back. CL, we're gonna watch. Cores, nice strength, all time frames. So that's in the that's the retail sector. All right, 9:16. So I'm going to pause and let Greg take over into the close. But feel free to ask me about any other questions or stocks. I can just type my answer even when he's talking. He mentioned ETFC breaking out. I'm going to watch that. ETFC. Oh, I'm sorry, the other one. IBKR, Interactive Broker. Strong, much stronger than the banks. You see this? Wow. I guess, people, they're making revenue on trading, I guess. That's what they're in the business of doing. Marvel. Yeah, it's kind of hard for me to tell if that gap's real. Daily's a mess to me. I'm not sure what to do with that. KHC bottoming pattern Greg mentioned yesterday. All right, Greg's going to come on, so I'll mute myself.
Morning, everyone. Give me a second to bring up these charts. All right, you should see the screen. You can adjust it to your liking. So the Amazon trade was a gap up above that consolidation yesterday. And besides the gap up out of the consolidation, it was a shock type of play, meaning you've got this having rolled over. It was under the 20 MA. You had a reversal with a topping tail there, and then prices gapped above it. So that made it a excellent play, and why it was chosen besides the short term to expiration. And now it's gapping up. Last I saw, there it is, almost 11 points. So that looks good. Now, the other thing is that with the grub that Dan mentioned, it's in the technology sector. So maybe, like LRCX and IBM just having a negative overtone that's affecting it. But typically that pattern, historically, from what I have experienced, is that it gets bought on a gap down. And it's trading kind of pretty wild, not wild, but, spready. The last two quotes that you can see here in the ticker, 102.45, and then the next one, 101.60. So that's, I guess, pre-market, somewhat to be expected. But anyway, we'll see what it does. It is below this 5-minute base. It was going sideways for the most of the day. That said, it should, you can see the 60 here is down below. What we want to see with that is that buyers step up at the open and see this gap down as being a buying opportunity, and they just push it right back up again. So we'll see how that. Good morning, John. You are in Tesla short at 294. I did see that it is gapping up here. Let's take a look at it. I did look at it, but the gap up, in relation to the overall chart wasn't that concerning. So the market's up here. Where is it in this? This adjusts dynamically. Here it is. So it's up 430. So here it is. This is a 24-hour chart right there. So it's up against this resistance. And, it is bearish on the daily. Now, John, one thing to take note of, these kind of patterns, when they start with a wide range bar off of the low like that, it is a concern. Now, that being said, it did chop around up here for multiple days. So my rule with a setup like this is I won't short it here after it first comes up, but I'm with you with the bias thinking that this can go lower because of the fact that it went sideways here for about 6 days or so and then lower. So it just may be up because the market's up, So, you got to hang in there and see what it does. And looking at the 60 here, it's just pushed up into resistance. So it hasn't negated the bearish look to the 60-minute chart. So, trades go that way sometimes, and you just hang in there in what I call intelligent hope mode. You've done your assessment. The odds, historically are on your side, and you're going to see what it's going to do here and whether, it plays out as suggested here by the pattern. So we'll see. Thanks for participating and asking. I mean, anybody, you guys want to look at certain things that you're in, even if it's not one of our positions, we're happy to look at it with you. NVIDIA, that was, where is that? 235. So this kind of a gap. So when we look at gaps, I want to look for things like Amazon yesterday that's gapping above resistance and has some shock. This gap down in NVIDIA is kind of meaningless because it's gapping into the range. Here, it's not gap. If it was gapping under this low here, that would be attractive as a short. And it's the same thing with this grub. Ideally, it wouldn't be gapping down at all, and it would be gapping higher. But, sometimes it doesn't always work that way. But this gap down is similar to NVIDIA. This actually looks better, but it's really not meaningful. We'll see how meaningful it is after 5 minutes and 30 minutes, and then we'll see where it goes from there. The IBM, as I mentioned, I didn't mention it. I don't know if I mentioned it in the video, but I typed it in some of the commentary that it was down 10 points overnight, and it hasn't bounced. It's down about where it was when I sent that letter out. So it's a bearish gap, gapping way down here. But I thought it would have more of an effect on the market, but it hasn't. Let's look at the Dow futures. The futures have weakened a bit. You can see the S&P futures here on my lower right, as you're looking at that. So the Dow futures have kind of pulled back a bit, but this pattern really isn't that bearish at all. But take a look at this. Let me point. I like to point out some things that you can take away as far as recognizing patterns from the past and how you can use them in the future. If you've seen some of the videos when I review the markets on the YouTube, you've noticed on the S&Ps on the daily chart at the high in February, and we could look at the daily chart here. Hold on. Well, it's going to change this chart here, but there's a breakout failure right at the high up there. And here on the 5-minute is the same pattern, a run up, a breakout, and then an inside bar, and then a break below. And that started this correction here. Is it looking bullish? Well, Hill Philly Girl's asking me on YouTube, is SPYs still bullish? It's up. So as I mentioned yesterday, right, as a rule of thumb, right, so you can assess what's happening, you look at the prior day's low as your first reference point. Is it breaking below the prior day's low? But so markets continues to keep coming in here. S&Ps are coming down to the daily pivot. Little trader pivot line there, but it's in alignment with this support. So we'll see if it begins to hold. So looking at the spiders, let's see where they're at. Why is this? Something happened here. Okay. So spiders closed at 270.19. They're trading at 270.81. So they're higher. Now, the 60-minute, that's a 24-hour chart, is just grinding up here. Maybe it's going to pull back a little bit, but still bullish. Now, what I said yesterday as a rule, and this is a kind of a narrow range, but you go with the prior day's low, right, as your first reference point. If it breaks below that, and then as an intraday gauge without even looking at it, you go with half of that prior day's range. Most of the times, a bullish trend will not retrace more than halfway into the prior day's range. And when it's very bullish, it'll stay near the top of the prior day's range and then continue to move higher. Okay. Well, if we change this to a 5-minute, right, we see that it's pulling back here, and you don't have the same amount of data, and volume in the spiders as you do in the futures, which are right here. And this is right where buyers should begin to step up and pick up some contracts in the S&Ps. And you see the bottoming tail bar beginning to form right there. But it's in a downtrend on the 5. So what we'd want to see is it go sideways for a little while and then begin to push up. But this is what we do each day, is assess the trend in multiple time frames, where support is, where resistance is, and then see if trends come together, in the smaller time frames, matching the higher time frames, and that's what puts the odds in our favor. So we shall see how that all plays out. Facebook is down a bit. Now, take a look at this chart right here that I'm going to pop up here. This is a little bit of a concern as far as the market starting to come in at some point, maybe whether it's today or tomorrow. These things aren't pinpoint accurate, but look at where the volatility index is. And it's coming down to that point where it reversed higher last month. So with the market moving up, right, it's losing a little ground here, but Dow is up 59, S&P's up 6.5. It would make sense that the VIX would begin to stabilize here and turn around, which suggests that the markets are likely to come in. Now, the ideal scenario for timing this with a bit more accuracy is to see option traders buying a lot of calls, which they're not doing yet, which, not having that in alignment is actually a positive for the market, looking for it to go higher. But when you have the VIX come down to support and option traders are buying a lot of calls, that's a higher probability scenario that the markets are likely to come in. Okay. What time is it? Market's going to open here in a minute. Let me switch my platforms around and we get going. Give me a second.
Looks like Greg's Oxy, OXY, gapping up again. And maybe today will be the day. 30-minute low. We can sell an out-of-the-money call spread or day trade short.
That grub gap down more than halfway into the range, and so we'll have to see what it will do here in the next few minutes. Spiders actually gapped up in toward yesterday's high. I'm not showing them here, but you can take a look at that. You can see them right there and right there on the 5-minute chart. So from a bullish point of view, what we want to see here after 5 minutes is it just takes out the high of the today, that first 5-minute bar, and pushes higher. We'll see if that actually happens.
Wow, look, that CSX I was talking about pre-market. I was wanting it on a pullback. Look at it go. It's just, launching right now. And that's something I would not chase. Greg, we've been watching these metals. Look at X, US steel.
Is it going down?
No, up. I mean, that could be a nice put spread.
I was interested in it if it went down. Based on the daily setup. Callaway Golf's still around. Facebook holding up. I'm going through these gappers here. So Grub's in the gap down list. It's not gapping under a prior bar's low. But still, I mean, it wouldn't meet my gap criteria to short it. It doesn't mean it can't go down. But if it was gapping down under yesterday's low, I would consider it as a short. Semiconductors are getting shellacked here. Just saw AMAT.
Yeah, pre-market, I had a lot of them down. I was looking at LRCX is ugly.
That's in this list. Gap down under a green bar. That's what's in this list. You usually don't get many in these two lists.
AMAT, ugly. SMG, ugly gap. XLU from yesterday, still breaking out.
Wow. Spiders are holding up here.
IBM new low. Yeah, today's, there's an option expiration day for our spiders. And we're in a bunch of them that expired today and Friday. But as you know, I love putting on new positions on expiration day. And spiders look strong right now. On the hourly, it broke out. It's moving up into pre-market resistance. I'll see, it's just we're up 4 days now, or 3 days. But let me see if we can get paid. Yeah, 270 put that expires today is only 25 cents. That's not as juicy as I would like. Wow, Greg, look at our Chevron. That's one we were looking to close into strength because of earnings next week.
Okay. Okay. Grub just got an alert. Not looking good. No, it's inside this range here.
So, Greg, would you use a 30-minute low on Grub or even tighter?
No, I'll use yesterday's low.
Yeah, that's what it is right now. Okay. And I even looked at selling an out of the money call spread against it, but there's not enough juice in it. And that would be how we leg into an iron condor as an adjustment strategy when the stock's not doing what we wanted it to do. Greg, look at this SPWR I mentioned pre-market. That's nice. Has a nice 15-minute chart pre-market.
30. Guys, let's watch this Akamai. See, this goes sideways here for another 5 minutes. 1, 2, 3 continuation. I like the daily.
Twitter's coming in hard. Wow, Greg, Akamai, that reminds me of trading in the 1990s, the internet days. Remember him, Akamai?
Yeah.
He used to be a high flyer.
It's not so bad now.
The puts are just ludicrous spready. I would not touch that thing.
So the Twitter coming in, when you look at the daily chart, it's no big deal. I mean, it could get ugly, but I mean, if I owned that yesterday near the low, I would just be hanging on.
Well, I'll just add a comment to that. I agree. The daily, if that's all you looked at, wouldn't bother you at all. The only thing that concerns me a little bit in terms of putting on a new position is the velocity of the fall in the pre-market 5 minute, giving it all up, and then a small gap down on the hourly. So I guess I just need more information of stabilization for a new trade.
This Akamai, the 5 minutes, got another little less than 3 minutes to go for this bar to complete. And I would like for it to kind of hang right around where it is rather than take off through the high of the day here. And S&Ps aren't doing anything. These are actually weak, relatively weak.
Like just going back to your Twitter, if we get stabilization here in the next 15 30 minutes, then currently the 30.5 puts for Friday are 25 cents. So percent wise, that's pretty good juice. Wow, Greg, that interactive broker's ugly, engulfing.
Well, it's done so well, it kind of deserves a resting day.
ETFC is better. The Morgan Stanley on earnings.
Let's take a look at this.
Yeah, for me, I would want it to take out that ugly prior bars high and then get a bullet.
Shoulder. Should look at that for a put spread. I'm watching Akamai here, but that gapped up above some resistance. It looks pretty good.
Oh man, Fizzler looks great. Yeah, something's going on in the solar world. That's why SPWR. There was CSIQ. What else do we like in that sector? I know some of them.
Solar looks pretty good.
I know. I'm looking it up right now. I mean, that looks
there
like
aren't a lot in that sector that have volume.
This looks like
solar, and I think the CSIQ, like you mentioned, those are the best.
No, I like this a lot. When's earnings? Some Fizzler. This looks great. $70 puts or $1.10 for 9 days. That's massive.
26th.
That's why it's next week. So shoot. Unless, we talk about holding over earnings, you could sell it.
I don't do that.
Right. Well, we have discussions on looking at the pattern and making an exception, but I hear you. All right, so I'm looking for Friday expiration. And there's no good juice for out of the money. Yeah, CSIQ is a mess. But maybe it's a put spread.
I have a couple of pages set up with each monitor. What do we got? like 16 daily and 5-minute charts. So on the 30 something, and a lot of stuff is moving lower on the 5-minute time frame, which doesn't negate what the dailies, but overall, I mean, it's kind of like if you're looking at the cues, they're turning lower here. That Spotify is finding some buyers. CL, that was yesterday. Take a look at that one, Dan. It might be worthwhile. Had a 2-day consolidation, just inched above. You can see here. I'll buy this above the high of the day. Getting alerts here. Okay, gotta switch. Johnson & Johnson's getting a shellacking, Dan.
CL has a ton of juice for next week, so it must have earnings.
27th.
Yep. Yeah, that's next week's expiration. BMY has a doji as of now, but absolutely no pattern.
S&Ps are trying to hold this area. They're sloppy. They're trying. Financials finding some buyers.
Remember your RH from yesterday?
No, RH.
Yeah, my buddy.
Mm-mm.
Yeah, you mentioned it yesterday. Romeo Hotel. But it was just too spready.
Oh, yeah. RH. Yeah.
Let's see. Dan has a question, or David, sorry. Couldn't we hold, or you're talking about CL if it has earnings on Friday with 1 day left? No, David, the problem is when you have a known news event like earnings, it's still going to have a very high implied volatility. So yes, you'll get a tiny amount of time decay. Or if the stock moves up, like our CVX, then you can do exactly that. You can trade it and know that you're going to close it before earnings. But your comment here about is the majority of the time decay gone? The answer is no, because of the known pending earnings event. But again, like our CVX, we're at 80% of max, 75% of max profit right now because of the directional component. The CVX has rallied robustly from our entry, making our out of the money put further away and therefore less valuable. It's a smaller delta than it was when we put it on. Greg, your ketchup company is not doing it today. KHC.
They're not interested. My Akamai just chopping around here. It's okay. It's at the top of the wide range bar on the 5.
Now on this Twitter, if we can get a higher low on the 5-minute, then I have more confidence.
Be right back.
Kors broke out, KORS, but then it got slammed with a topping tail. And in my opinion, the odds are just not high odds right now for new trade. I mean, unless you're just scalping. So that's why I've done nothing new so far. TRI that we mentioned yesterday, that looks better. There's a bottoming pattern.
So my Akamai, it might come back. But, the entry rule kept me out of what might be a situation where I'd be killing it for a small loss. So that's okay.
And Greg, check out your Oxy.
Well, in a minute, the CL may hit here. Just waiting. Got to trade through 61. I'll just put an order in and let it trigger if it hits. Yeah, I saw the Oxy here. I'm tempted to short it, believe me. I mean, they gap up into resistance.
Yeah.
I prefer the 5-minute to have already broken down under the support, which means it takes obviously some time to deteriorate from this kind of a pattern, but that's when the momentum starts to pick up. So this could be fine as a trade into the gap fill or 50% into the gap fill. I mean, as extended as it is, you're still going to have those Johnny come latelys that are going to step up and buy it thinking that they missed the boat. And, now would not be a good time to be picking up that.
Look at a retail broke out today, XRT. We've been watching that for a week.
Mm-hmm. Okay. Yes. Let's see. ODP.
Yeah, and you were making fun of it when it was $2. So there.
Okay. Okay.
Ooh, Akamai, big reversal now.
Yeah. No love there just for that today.
Hey, for if it closes here, Greg, check out Shop. Beautiful 123.
I have it on one of my charts. Yeah, but that's a perfect example of what I said that I'm seeing a lot of today at the moment. Decent daily charts, but no one loves them this morning.
Wow, Greg, that we could sell the the 118s for Friday, 35 cents, but I'll watch it for tomorrow and then maybe go out to next week. It's spready though. We're still long XLE and waiting to sell calls, and it hasn't triggered yet.
Any day now. Home Depot come to life. And Lowe's, not as big a day, but sideways on its 200 if I didn't check earnings. Okay, so Akamai is a scratch. No, nothing going to happen there.
Yeah, Home Depot. I like that should be a put candidate. Let me look. We had one last week that even though it went way against us, we made our profit. And who was I talking to earlier? David. Yeah, Home Depot was a good example last week of the melting ice cube. And, it's a race to expiration. And it went against us, but never took out our stop. And we had a nice profit on it. So let's see if we can duplicate this for next week. So we, now that it broke out, we can sell the 172 puts, which they don't have. The 172.5 is, wow, that's not very juicy anymore. It's 40 by 54 and spready too. So that's not near enough juice to interest me. LOW also. Nothing. Apple finally cracking on the hourly a little bit.
Dan, sometimes with these, not sometimes, a lot of times, we find a lot of setups, but I find setups and I look at them as like, I feel like a guy, I'm mining for gold, and I go out there and I get my pan and I got the stuff in there and there's the gold, and then find out it's fake gold because there's no juice.
Well, but let me just add to that. We always are wearing our hat of directional trade or income. So you can still mine. If you're mining for gold, gold is the best. So gold should be a directional trade. So if you're finding some nice pebbles or whatever a tier 2 is, those are our income trades.
Yeah.
So
I don't see Home Depot as something that I want to buy as a directional.
absolutely not. That's why I didn't mention it.
Yeah, so it's fake gold. But I got to come back to it and I'll keep an eye on it because it's the kind of pattern that in another week it can be gold. I mean, even as a directional, just needs a little more work, I think.
Right. Yeah, Qs are giving it up here. And Tesla looks like the strongest FANG stock today.
Yeah. Still in that range. I'm feeling it for John. Said he was short. I mean,
but I answered them in text also, Greg. We were looking at it was a question, and I said, I'm answering it in text, and I typed out my answer, and so I don't know why it didn't show. But I thought it was when I answered them, it was gapping down, so I said just trail your stop on the pivots on the time frame you're trading.
that is kind of it depends on your rules. It's not that it's difficult. It's more kind of frustrating in that it's just part of trading. And that, here's a pattern. And I explained the good and the bad of it. And it looked really good that it could roll back over here, except for the wide range bar up. But my point I want to make here is that with a setup like this that hasn't totally negated its bearishness, I mean, the moving averages are pointing down. It's broken down here. It's in an area of resistance and so on. And you can get this bullish day, whereas, I mean, in my own thoughts, it's like, why the hell does somebody want to buy this like this, especially on a day where the markets are choppy to lower? So whatever reason is, I'm just, my point of view is based on the technicals. And then tomorrow, it flips and everybody hates it. And then it's going back down again. But, on that day, you're dealing with this unruly child that won't obey, your wishes. And there's nothing you can do about it, but hang in there. So if you've share sized it accordingly, that's what equalizes all of that. So if that, for example, if that Akamai would have hit today, here's an example. It didn't, right? But if on the 5 minute, if this Akamai would have eventually traded through here, my stop would have been down here. Now, I don't know what it would have done, but if it could have taken out the high of the day and the market was kind of in alignment with that, odds are, based on that daily pattern, I could have had something that could have run several dollars higher. But what I would not have done was to put my stop under here, because a lot of times that's where you just, in the moment you get a jiggle. The date on the charts is not today. This is today's data. This is exactly what's happening right now. I'm not sure the date that you're looking at. Today's the 18th. Maybe what's on the bottom because it's scrunched up. BC. And now my CL is backed off too far. I wanted to stay up here and take out the high of the day. Earnings date. Oh, here, that date. Glenn. Thank you, Glenn. All right. BC, what you're saying, the date on the chart is not today's date. Yes. This is when it's going to report earnings. This is the float. And then you can see over here today's, up or down and percent change on the day. You can see what sector it's in, sub-industry. Starbucks, Hilly Fill girl saying pull back into the gap fill. Okay. This, I forget who, somebody downgraded this. Was it this week or last week?
Well, I wonder if they're all over the news about and I don't know the story about, false arrests of 2 black people and wherever. And
I don't think it was a false arrest, Dan.
Yeah, actually, I don't know the details at all.
The story was, which was told to me last night by Katrina, she said it happened 2 times. Black man goes in and wants to use the restroom, and they said, "Are you buying something?" And he said, "No, I just want to use the restroom." I says, "Well, then no, we don't allow that." And I guess they have a code to the restroom to get in. White guy comes in, "Can I use the restroom?" "Here's the code, sir."
Ah, interesting.
And the black man sees him coming out, and he said, "Did you buy something?"
Interesting.
"No." He says, "Do you want the code?" And the guy was filming him when he did it. So Starbucks, I guess, when I was told, in that area, they closed down like all the stores in the area to have a day where they were teaching all of their employees about, not doing such a thing.
Yeah, it's in the future. Yeah, I read that today. That, that guy set him up. He set himself up for a marvelous lawsuit.
Yeah.
So whether he just lucked into it or whatever, he has a great lawsuit on his hands.
Yeah. Remember Denny's years ago?
Yep. I sure do. All right, with market falling, I'm closing out my volatility trade. We squeezed a very nice gain out of it, and I'll just look to re-enter.
Hillbilly Girl says they're closing 8,000 stores for a day for sensitivity trading. Training.
Yeah, I saw that in the journal today. I'm just curious. That's 8,000 out of what percent is that? In the U.S. How many stores do they have in the U.S.?
I have no idea.
Probably, I'm probably thinking easily over 100,000. So, I'm just I'm just wondering, out of curiosity, how many people are going to be walking to their favorite Starbucks on the way to work and mad.
Probably a lot.
Yeah, but they're on, every third or fourth corner. So yeah, John, well, I'm in this stupid grub too. Greg recommended stop yesterday's low. If you wanted to, close some of it, an adjustment strategy. I already looked at out of the money calls are not juicy enough. I mean, if it were a total bearish pattern, then we could short the stock and convert it to a covered put. But the problem is it's not a one, I mean, it's a bad pattern we're managing, but it's not a new short setup. And so that's the problem. If you short the stock and then it bounces, then you're losing money on your short. So we're in a bad, child management trade. So there's no perfect answer, but whenever in doubt, you can, cover part of it, just lessen the pain of watching it go further. So yeah, I did a 10 lot yesterday, so I'm, feeling the pain here too. And that's just part of trading. My gains on my spiders and VXX dwarf it, but it's still not pleasant.
What technical setups would have told us the market is rolling over? Well, BC, that question is really about the time frame you're looking at. So rolling over in one time frame is meaningless in another. So the spiders here, I covered this yesterday and probably in the letter, probably definitely in Monday's letter, I said right here is where the markets would run into some trouble. Those overlapping bars right there. And they're having some trouble, but in the context of this daily trend, it really doesn't mean much. Prices cleared the 50 MA. They're hitting some resistance here. The weekly has got this double bottom and this wild whippy range here. So, it's not that the markets here are like, oh my God. If you bought the 5 minute or this 2 minute breakout in the morning and you're still holding on, well, you've got bad management from a 2 minute time frame. And now you're in trouble. But, prices are coming down to this support area down here. We'll see if buyers want to step up. Right there. We'll see if they want to pick it up and push it back higher. And the other thing that I discussed in the morning review was, if I find that chart, was this volatility index being right down here near this prior low, which was a bit of a heads up that we could see some selling, based on that, since it bounced from that area and spiders in that area of resistance. So those things pointed out to at least short-term weakness, and that's what we have here. But in the context of the daily time frames, nothing's rolling over. It's just a down day so far. On that grub, what we want to see right now is a breakdown bar failure on the 5 minute chart. Spiders are starting to stabilize here on that support. And That 5 minute chart right now. We've got how many minutes left to go? We're just starting. We've got 4 minutes to go in this 5 minute bar. So what I'd like to see, right, because I want to see this turnaround. This daily chart's been damaged. That has definitely the case. It's been damaged, but it's not totally destroyed. So intraday, if it wants to obey my wishes, we start with a breakdown bar failure here, which is a little bit of an intraday shock, which is beginning to develop on the 2 minute. You can see. So 100.26. Well, it just got over it by 2 cents. Looks like 32. Let's go. I don't know if this is if it'll play out. If it does, wonderful. But it's certainly the type of scenario where you know very well there are participants that just puked it up on the break of the low of the day. And a lot of times that's how things get turned around. It starts with a breakdown bar failure, but we'll see. We'll see. Now, if the market can find some legs, that'll certainly help. Look at what I found here. Some relative strength. Energy. Kind of late to the party, but it could bring up the rear.
Hey, watch your language.
What'd I say?
Talking about rears.
This would be ideal. It just stayed here for a half hour or so. I wish some of the things I looked at would have hit, and I wasn't thinking to short stuff, but at the moment I feel successful in this morning that I didn't lose any money. What I was thinking kept me out. Cheesecake is somewhat interesting here. Showing some relative strength and just chopping around. But Lennar finding some love, Dan.
I'm just adjusting DHI also. On DHI, our rolling worked in that one where we took in more credit, raising or lowering our break even. And now, so we took in a total of it. Well, I'll post it here in a second. So we're going to book. Here, I'll post it and we're already in this trade, folks, so I'm just posting it. Go ahead and read it if you want, and then I'll explain it.
My wife's phone. I hate that song.
So I'll explain what we did in this trade. All right, so on DHI, yeah, if you don't mind.
I had it up there.
Yeah, DHI. Yeah, so we entered this. Let me give you the date because it went way against us. On April 10, well, it says right there, April 10, we entered the trade and we shorted naked puts, out of the money naked puts, and then it went against us for 2 more days, and then it started to bounce, and it was Friday expiration day. So we rolled them to this Friday, but we took in another 47 cents a share, and now we have 80 cents of potential profit, which is where we are right now. So it is looking good. It's breaking out now, but I just chickened out there and said, let's just book half because we've now we've booked 62 cents a share on half. And then I've given you the management strategy for the back half. Move it tighter of today's low or break even. So as long as we don't have a nasty gap against us, we've turned that trade profitable. But we rolled intelligently because the charts were still bullish. The weekly chart was bullish. And the daily. It was a beautiful pullback into that wide range bar. So that's when we roll, is we say there's nothing wrong with this trade. I want to still stay in it, but I hit expiration day. So let me resell it to the next week and increase my maximum gain by taking in more premium. The folks that roll in hope mode with the pattern smacking them in their face is what we do not do. People roll just saying, I hope it comes back, please. I hope it comes back. And then they just put their head in the sand. And the problem with an option going against you so far deep in the money is rolling doesn't help you because you just roll and you're just postponing your loss because you aren't getting the extra premium from rolling. See, in this one, the stock's $45, right? The strike price. And for 1 week of time, we took in 47 cents a share. That is massive premium. That's over 1% of the strike price for 1 week. And that's exactly, and this is the weekly options trader. But because of this is exactly why we put a new trade in last weekend, which means we entered it on Monday for our advisory letter. We're like, this is a new trade. And so that one's working great over there also. But let me see if I need to adjust that one. Yeah, no, we're totally fine on that one because we shorted, that expires this Friday, the $44/41 bull put credit spread. So this one doesn't, and I already raised the stop yesterday, so there's nothing to do there. Just it's either going to expire worthless, or we have a stop there that should guarantee a gain. So nothing to do in that trade. PHM also, Greg, is poking its head up. We traded that one, and that was another example that it went way against us, but we still got out at like 80% of max profit. Let's see, David. That's 100% correct, David. Yes, it was. It was like my recollection, because I kind of remember so many patterns in my head. I did it while it was rallying on Friday, and it was roughly like 34 cents in the money, or 32, something like that. But since there was very little time premium left on expiration day, we were getting a lot of premium on the other one. Oh yeah, but it was still time premium, David, because the in the money on the one we closed only had like 2 cents of time premium left. So had I sold that 45 naked without rolling, I would have only got like 49 cents. Does that make sense? So it was still 100% time premium because of the roll.
Dan, Jim posted a question in questions. Said, when you rolled, you have to close out the original trade. And Jim, you could post that in the regular chat, but
Yeah.
I saw that was there.
Yeah. Actually, to everybody, we would appreciate it. I mean, we answer everything. It's just this software, just like I did with the Tesla this morning, it says, "Do you want to answer this publicly?" And I say yes, but then I don't see it being pasted. So
It just posted there. When I clicked it, it went into the chat. Unless Jim did it. I clicked the answer it live, and now it's in the regular chat.
Okay, all right, good. Yeah, Jim, do you have to close it? No, you could no, we're the option trader, but let's walk through the ramifications. If you do not roll the short $45 put on DHI last Friday and it closed under $45, that's what's referred to as it's expiring in the money. Under the Option Clearing Corp, which is the OCC rules, options that expire 1 penny or more in the money will get automatically exercised. So if you're short a $45 put, what does that mean? And I'm being detailed here, not for you per se, but for everybody. What does that mean? It means you've agreed to buy X number of shares, 100 shares for one contract of DHI at $45 a share. So over the weekend, on Sunday probably is when the brokers do it, like Saturday night, and it's happened to me many times. I wake up on Sunday and I see different positions. So you will then be long DHI, the number of shares you've agreed to buy, and that amount of money, $45 a share, will leave your account. That's what the broker's going to do. So that's if you did not close it. If you rolled it, what rolling means is we're simultaneously closing it and reopening it in a different strike and or expiration. We rolled it to the same strike 7 days out, and we did it for a 47-cent credit. Once you close a contract, it's impossible to be assigned. You've extinguished your obligations. Being short puts or calls, you have no more obligation. So, but then we have the obligation for this coming Friday. And that's the trade that I'm adjusting right now, is this Friday's expiration. Yeah, nice 5-minute on NOV.
So that's 2 commissions, Dan?
Yes. And at Thinkorswim, which is owned by TD Ameritrade, where I trade, they have a rule that if you close options that are 5 cents or less, there's no commissions. But I don't know. You would have to call and ask them if that still applies to rolling. It should, I'm closing it, and that's what you said. It's free. So when you roll, what happens to the original trade? It's extinguished. It's gone. Your obligations are gone. So read the math, what I typed in here. Oh, Greg, see, I'm only typing to all panelists again. But,
It defaults to that when you come in. So you got to.
No, I know. But my point is it's still posting everything. Everybody can see what I've been doing all day. So, Jim.
No, I don't see anything that you posted. If you just posted something.
Well, yeah, I've been interacting with people. You didn't see the DHI trade I just posted that I've been talking about for 10 minutes?
I do, but I don't know that everyone else sees it, because to me, what I see, it says Dan to all panelists.
All right, well, here, I'm going to post it again. I've been interacting with people like they've been seeing it. But yeah, I gotta pick up on that. All right, so did everybody see that? I posted 10 minutes ago, and that's what I said, read, and I would talk about it. Oh, shoot. All right, so, oh, George said yes. All right, whatever. I just gotta make myself get better at checking it. All right, so read that, and that's what I've been talking about for the last 10 minutes. So the first trade, we put 33 cents a share in our pocket, in our brokerage account, but I like saying pocket, sounds better. And then we extinguished that obligation. And what did we do with it? We could have either just extinguished it and gone home for the day, and then you either have a gain or loss, depending upon if you had to close them at more or less than 33 cents a share. But what we did is we closed it and simultaneously reopened it 7 days later. And did we have to pay money or get money when we rolled it? We got money. We got an additional 47 cents. And that's because we're selling more time premium. So now we have a total of 80 cents a share in our pocket. And right now we just closed half at 18 cents. And, you can see the management of what I did on the other, and that should lock in a profit on the back half. We're either going to make the full 18 cents if it expires worthless, or we're going to stop out under today's low. And I guarantee you, even if we do stop out under today's low, it's going to be at a profit because there's only 2 days left to expiration. And that's the beauty of selling premium. All right, Rob's asking, Grub is back over strike. Just wonder if it will go back to gap fill. Rob, if you can answer that for me, I would love you. I'm in this garbage trade too. We're just in management mode. We're just like flying the airplane. We got to, take the emergencies and weather and as it comes. And we're in a thunderstorm right now with Grub, and we're just managing it. Yeah, not Southwest.
This is where, Greg, this is the first time. What is the format in our live trade? Yes, Matt, live trades are taken. We're called, we make you aware of what we're thinking before it hits. Sometimes things might happen quickly, but the format is for us to explain what we're looking at and to provide that to you so that you have time to assess it, especially the options trades. What I was going to say, assessing these things in the questions, what's it going to do? As much as Dan and I know, we look at what's happening in the moment that suggests what's going to happen, in the next few minutes to the next few days. But, and that's all we can do. But what I've covered in the Master Trader Technical Strategies course gives you every single tool to make assessments as to what the probabilities are, right? So, and then the options course teaches you all about options. And So even in this grub, I mean, you see what's begun to take hold here. What I said, what I suggested with the breakdown bar failure, and that comes together with what's happening in the broader markets. I said the futures were down near some support. The break lower here, and will it be able to get back up? Maybe. And this daily chart, as I said, it's damaged, but it's not destroyed. So education, I know you say, well, I'm putting on my little salesman hat here, but it's to your advantage to learn. And, you learn this stuff, you're going to be head and shoulders above everybody. Your job is to assimilate it and, make it yours.
Right, and we've given many examples of that just over the last few days. You do not need to follow what we do to a T. We're idea generators on stocks, options, and we want you to fine tune it to your comfort zone and trading plan. So you might love a put spread in Halliburton of ours, but you might say, hey, I'm going further out in time or less time. And even though you sold a $45 put, I think I'm going to sell a $43 put to give myself some more cushion, even though I'm taking in less premium, and that's 100% fine. All right, question here. All right, Greg, I'm sure we're both going to want to answer Florence's question here. With the upper strike way down at 125. Okay.
Guys, as getting to next week, you're saying, do you want to subscribe to this room? Do you want to take classes with us? Now, subscribers, we always have specials and, we provide discounts on these classes, but realize for those, and we have quite a few people that have taken the options class and Master Trader Technical Strategies class. So you could buy this room for a year with the discount provided for those classes for $32 a month, which is like, okay, you could say it's ridiculous, but we appreciate, whether you're a subscriber or you're taking the letters, we provide discounts for that. So not only you get amazing, fantastic education, and I say that without a blink hesitation. I know what we provide as education is the best there is, bar none. It's not about, hey, this is how, you can risk $100 and make $1,000 with this one strategy. That's BS. It's not about, let me sell you my latest, greatest indicator, red light, green light, or does whatever. We teach you how to do this on your own, and you don't need anybody else. You don't need somebody's indicators to read what's happening here. It's what goes on between your ears. So, and that's all I have to say about that.
Oh, I'm sure you'll have more. Okay, Greg, I'm going to take over the screen because I'm going to answer Florence's question by showing my platform.
Go right ahead.
How do I kick you out?
You can't kick me out, Dan, but you can take my screen away.
Okay, there it goes.
Hit stop sharing.
Yeah. I got it. All right, Florence and everybody else. I'm sharing my Thinkorswim platform. So here's what Florence is asking. And so let's answer her question. She's saying, I'm short the 1025 out of the money put on Google, and it has earnings next week, and whisper figures are positive, and my analyzer, 85% probability. Okay, so there's a lot there. I'm just going to start with pointing out a couple things, and then I'll come back and make sure I answered all your exact questions. And I'll just kind of give you a quick little tour of this. So Google, this is Thinkorswim. Oh, by the way, see this thing on the left here? This is my high implied volatility scanner. And we use this to help us, you know, when we're looking for some high volatility stuff. This pops them out, and then we look at the chart, we look at the premium, and we see if it makes sense to put on a new trade. Okay, back to this. So Google calls on the left, puts on the right. This is 9 days to expiration. It expires April 27, which is next Friday. And that's the one that Florence is asking me about. She says she's short. Let me just scroll this up all the way. She's short. And whether you have a spreader on or not, it doesn't matter for what I'm going to cover. She's short this 1025, way out of the money, put on Google. Look here, since it has earnings, this is going to be a whole lot higher. This is saying it has a 37.8% implied volatility, this whole cycle right here, this April 27 cycle, 37.8 implied volatility. The parenthesis here is saying that that implied volatility is implying a $53.39 expected move up or down from the current price. See, options don't read charts like we do. They just say, hey, statistically, based on the way this animal ran in the past, this is what these options are pricing in, a move of $53 and change. Now, I'm going to show you 37 implied volatility doesn't tell me a whole lot, because I need to see what the implied volatility is relative to itself. So this right here in the middle here is called IV for implied volatility percentile. It's 89. And that's expected because there's pending earnings. And what that means is you look over the prior year, and whatever that number was, what did I say, 38%? It just plots it from 0 to 100. So we're at the upper end of the implied volatility for Google right now. And that's, you're going to see it spike either on earnings or market fear, etc. But you can see here every quarter, it's going to be back at its highs because of that. All right, back to this. Now, Florence is saying that, well, she's talking about whisper numbers, this or that. I mean, if that's a tool that you use and you can do it profitably and consistently, then congratulations. I think it's all nonsense because I'm a chart reader and that's all that concerns me. So if you're short this, and secondly, you're making a bet on earnings. You're betting that it's not going to expire below 1025. And let's just say you sold this for, $8.20. Your break even at expiration is 1025 because that's what you've agreed to buy it at if the put buyer wants you to, but you've already put 820 in your pocket. So it's 1025 less 820 would be your cost basis if assigned. Now you're talking about E-Trade probability. I don't know what they're looking at, but my guess is they're just looking at the delta, the probability of it expiring out of the money. That's what delta shows us. So a delta of 0.20, if you were to be short one contract of this 1025 expires April 27, statistically, that's like owning, since one contract is 100 shares, that's that's statistically equivalent to being long 20 shares of stock. Secondly, this shows the probability of it expiring out of the money. 20 delta means that there's a 20% probability that it will expire below 1025. And one, so this is algebra, so this is why you had to go to algebra school in high school. 1 minus 0.20 is 0.80, right? So there's an 80% probability of it expiring worthless out of the money. So I'm not sure what your option analyzer is looking at 85%, but this is showing now it just dropped to 79% probability of expiring out of the money. And open interest here, there's 177 contracts that are open, that they're, you know, the put buyer can exercise it if he or she wants to. So if you're selling that, and so we're just chart readers. So I'll pull up Google. 1025 is right in the middle of that congestion. And you're just making a bet that they're going to have positive earnings and it's going to expire worthless. So I would not do that because we're adverse to holding over earnings, particularly on wild animals like the FANG stocks. My strategy, or preference rather, is to wait for after the announcement and then make a directional up or down bet and sell out of the money credit spreads the morning after earnings. And that's why I was focused on so many of them this morning. And that's why we like earnings season. But I didn't find any juicy ones, unfortunately, today to do. I looked at a couple, but didn't have high confidence and they were spready. Okay, so now I'm done. Did I answer everything for you in your question? And do you have any other questions related to this or my option screen here? Oh, and this is what this was our win put spread. This is how you, this is how I get the midpoint. I just log it up and we close that one at 4 or 5 cents this morning, the win. John, excellent question. It's not relevant to us at all in selling them. When we're buying options, so let's buy a call, for example. As a swing trade, we like at least a delta 75 to 80. So you just come here to my delta column and you can see them here. Here's 75, 78. And I, go deeper in the money. Here's my 80. So the 80 delta call is the 1022.5 strike. And the reason I like 80 is because we're going to get paid for our directional bias, and it's a good compromise for not paying too much time value. And I'll just show you what a hypothetical bull call debit spread is. So I buy that in the money 80, and then I like selling an out of the money to help finance it. So the stock's at 1076. And then so I come down here and I say, I look at my prices and I say, at what strike price am I happy to take in this premium? So look at this one. I'm just, talking here. So the 1125, the stock's trading at 1076. So that's 25 and 25, less $1.50. So that's $48.50 out of the money. So then I hit my control so I can log simultaneously, put in 2 orders. I hit the bid. Now, voila, this now is logged in at the midpoint. This is a bull call debit spread. Debit is when you buy, credit is when you receive. And, you know, they call it a vertical, which it is. It's a bull call vertical spread. But then this money that we took in on selling the out of the money call is making it a positive time decay. So it can still go against us a little bit, and we're still making money. It's only costing me $53.50 a share versus $1,076 a share. I mean, just let that sink in, folks. Let that sink in. We are limiting our risk to $53.50 on a over $1,000 stock. So we have leverage, we have less risk, and we have positive time decay. So yes, we buy options, yes, but we do them intelligently. But we need a directional multiple timeframes in alignment when we do buy options. And then we can either put on the spread all at once, or we buy the in the money call first, we wait for the stock to rally a few days, and then we leg in to either a covered call or spread. And that's exactly what we're doing with XLE right now. We're long XLE, and the stock is up 8 days since our entry, and we have not capped our gain yet. So here, let's look at XLE. So we would be looking to sell next week. The stock's at 73.53. And so I'd be looking to sell the 74s. So once this stalls, the momentum stalls in XLE, you can sell the $74 put for 72 cents. So that is lowering your cost basis 72 cents for 9 days. And then you just like I said a few moments ago, you don't have to do everything we do. You could say, well, you know, I think it's going to go a little bit higher. I don't want to cap my gain at 74, but I don't mind taking in 36 cents a share to sell the $75 call. And this is what I'm going to be covering also in tomorrow's webinar, is exactly this XLE. It's like legging in to covered calls. All right, so I could kind of went into that. And why, John, why not? Oh, no, John, bull put credit spread on Google. What I just went through there with buying it was just totally to show you the mechanics of a bull call debit spread. We are doing no trade on Google into earnings, none. But Florence has one on. And that's the question I was asking for Florence, addressing some of her questions about probability of profit and this and that. Well, complicated. Yeah, well, you know, riding, you know, driving a car was complicated, right? You know, until you learn. And that you went, remember, we all had driver's ed in high school, and you learn to drive a car. So our 10 module option strategies course is exactly that. It's your driver's ed. You know, we teach you what all this means in great detail. I'm just giving you the Cliff Note version. And then we just very simply divide it up into, is it a directional trade or an income trade? And income trade is we're selling credit spreads around patterns and getting paid for just calling a short-term top or bottom. It's such a beautiful thing. It's tomorrow at 4:15 Eastern. And we'll record it too, in case you can't make them. But at least being there live, I can answer questions live. Otherwise, you'll have to Memorex it and then email questions. All right, so Florence, thanks for the question, and that gave me an opportunity to, you know, talk about some other things. All right, I stopped screen sharing, so we can talk about whatever you all want. I wish there's a physical school. You know what? I know in colleges they're starting, some trading stuff, but I think it's more mathematical, analytically based. I don't think you can find anything in a physical school that teaches what we do. But why do you want to go to school when we can teach it to you in a seminar online from the comfort of your own home? Yeah, it's yeah, there's masters, because in my old prop firm, yeah, we hired quants that were PhDs in mathematical trading stuff, because we had black boxes, we had a pretty sophisticated shop. Should one have prior option knowledge? No, not at all. That's what it is. It's no, it's not an advanced course. It's beginning to intermediate. And even if you're advanced, I guarantee you're going to learn stuff, because we're going to teach you the way we approach it in a very, using charts and picking the right options. Thanks for that, Greg. Yeah, Greg, Matt is asking you a question.
Yeah. So, guys, the trades that everything that Dan is talking about are trades that were sent out to subscribers of either the advisory letter or the weekly options trader. So, as a subscriber to those, when you log into your members area, everything is updated in a sheet with, the day, what it was open, the opening price, the explanation of what it was. And so it's all there, to be reviewed, and the historical information is there. Think about it like, if you're considering subscribing to the room, you could see if you don't subscribe to anything or you're taking any class, it's 147. But if you subscribe to the weekly options trader, where those are going to be sent to you, and you get the videos that I do or Dan does and so on, it's like 139. So it makes sense to do that. So it's actually less if you subscribe and you're getting the letter and the room together.
Yeah, BC, I did. That's because I was
146.
Yeah, no, BC, that's because I was just specifically answering Florence's question, but we can very simply give you an example, BC, of a credit spread. Let's see. All right, I'll show my chart again. So BC, take a look at some that we have on right now. XLE. So BC, when this multi-month base on the daily, oh shoot, what did I just do again? Support on the weekly, crude oil breaking out. So this was a sector of interest for ours. Remember I mentioned a few moments ago, we have directional trades where we want a big target, and we also have income trades. This was actually one where we did both. There's nothing wrong with doing both for two reasons. They can be both in your own account, or they can be in, I said people trade their own flavor. But here's the question I wanted to ask you. On this day right here, BC, nice breakout, close above the 50%, close above all these pivots. On that day, we said, let me get the exact wording here, because this is a real trade, so I'm just showing you. So we sold Here, let me post it in the chat. So, shit, where'd it go? There. So on 410, we shorted the May 65.60. So even if this is 100% Greek to you, here's the question that I have for you. On this day that I just marked, this is $66, right, on the chart. Here's 65 right there. You see this line? It's under this tail. So based on this day right there, my question to you is, if you, I have to assume that you're a chart reader, because that's what our trading is based on. What are the odds, in your opinion, of this holding $65 for 30 days? Are you 10% confident, or are you 90% confident? I would say I was 90% confident. So that trade that we recommended, if you were to sell a 10 lot, all we're doing is selling a $65 put down here, which says, yeah, I'll buy XLE at $65 a share. And then we buy a lower strike price just so the broker doesn't hold a lot of money about, well, here, you know what, I'm going to do the ROI for you. So if we sold a 10 lot, we receive $460. The capital required at your brokerage firm is the difference in strike price less the money you put in your pocket. So that would be 4540. So let me do the math on this. Can't do that one in my head, but well, I can. That's 10%. I can do that in my head. Yeah, we sold the $65 puts and we bought the $60 puts. But I'll just go through the motions here, but it's 10%. Okay, it's 10.1% return on capital. And this, if I were to advertise like this, people would think we're snake oil salesmen. It closed at $69.91. I'm going to get my computer out, my Apple. $69.91 minus $65 strike. That didn't work. $69.91 minus 65 equals $4.91 a share, BC, that the XLE could go against us. And we still make 10.1% on our capital. And if I just divide that by the 69.9, that was 7%. And that's what I refer to as our cushion. The stock could go 7% against us, and we still make 10% on capital. That's why we love selling credit spreads on turning points. We're just getting paid to call a short-term bottom. Why not just sell puts? 100% you could, but you have greater risk if the stock gaps down against you. And number two, it's going to require more margin. So the margin on selling a 10 lot of the $65 strike, margin is 20% of 65's strike. So what's 20% of 65? 0.2 times 65 equals. So your capital on selling it naked would be $13,000. So it's 13,000 versus 46.40 or whatever I said a second ago, and your risk is less, because if it just high, the XLE is not going to gap down $10, but let's say it did, then your maximum loss when you do a spread is the difference of the spread less the money you put in your pocket. Yeah, so that was a crash course I just gave you on selling credit spreads, but please, attend live our webinar tomorrow, and or be on the lookout for the recording. And tomorrow I'm going to explain how we leg into covered calls, just like this XLE, and I'm going to talk a little bit more about selling credit spreads like I just did here. Yeah, Telegram, you have to be a subscriber, of course, to one of our letters, and then I give you the code and instructions. Wow, look at the market plowing the new highs right here at 11 a.m. Yeah, I looked at ex-US Steel for a... So here, look at this one, PC. BC. I'm looking for put and call spread candidates all day long. So this is US Steel. I saw it this morning, small gap up, and it's now breaking out. So I would be looking to sell a $34 put on this, either naked or a put spread. However, it has earnings next week, so I'm passing on it. So the only thing we could then do is, if you either want to swing trade the stock or do a bull call, do a directional option trade, but it's just not juicy enough for me. It's a nice day, but it has this resistance from the breakdown. So even though I wouldn't trade this directionally, I would be all over this to sell a put spread. So you would have seen a trade from me today, but for earnings. But then back to your trading plan. If a particular individual, like Florence did with Google, doesn't mind holding over earnings, well, there's a great, and don't mind the gap risk, well, here's Exhibit A. Here's a put spread candidate for you. All right, Greg, anything of interest into lunch here that we might want to nibble on? I just looked at NUE, but it's to extend. Here, I got the controls. NUE is in the steel sector. It's too extended. AKS, came out of its base. Stoled. These are all just steel stocks that I have in my head. That's
Micron looks great for, I'd like, buy this as a swing.
Definitely.
I want to see what it does here a little later on, but
absolutely. Look, so let me just kind of review it. So daily here, so it gapped down. Here's my 15-minute upper left, gap down, a shakeout, ugly red bar breakdown, bottoming tail, engulfing bar, 100% retracement, and just blasted through this resistance. So that leaves this day. That was a microscope of this daily. Here's my weekly to the right, 3-bar pullback to minor support right here. 2 small little bottoming tails, engulfing bar, higher range on the weekly. So I love it too. So now what we want to do is, as Greg said, I'm not going to put it on right now after it's just ran from 51 to 53 and change. But if we get a nice little, cup and handle pullback, whatever, we'll be watching this into the close. So now the question is, BC and others, it goes back to your trading style. This one qualifies for both an income trade and a directional trade. So it's like going to the ice cream store. Pick which flavor you like.
Thank you, Patrick.
Yeah, thank you, Patrick. Yeah, sorry if I've been missing some comments here because I've, been scurrying around showing things. All right, so now
here's one, Dan. this could set up tomorrow. And I'm looking at this because MU is shaping up and semiconductors are coming back. But Cypress Semiconductor, I want to see if it closes with a bottoming tail today. CY.
Yep. Okay. Yeah. So we're fine on earnings on MU. I'll come back to that in a second. Let's look at CY.
That would be a continuation type of pattern where I'd look for a measured move type of setup.
Okay. And see, I mean, I personally like MU a whole lot better because of this mess right here. Yeah. But yeah, I like the bottoming tail.
Well, you know, when I look at something like this,
to me, this has a cleaner void coming down.
There's no doubt that it's cleaner, but this will move with the sector. And will it stall there? Probably. But overall, this pattern suggests that it'll continue to go up. You know, it's in an uptrend on the weekly, and you know, so as I look at different things, yeah, one is going to be, you know, like an A plus, and some will be like a B plus, and you know, this is probably more like a B plus.
Right, and right, and for me, because I don't want to be more scatterbrained than I already am, I just will focus on MU, and I'll put that in one of my thumbnails. So for BC and others, let me continue with this example before I go to the gym because it's getting late. Let me show my screen again.
I know those who are in Grub have seen it, but as I pointed out the potential for a breakdown bar failure before it happened.
And yes, you did.
This is now back at the high of the day.
Wow. Wow.
Above it's making a new high on the day.
Sorry, I was looking at MU on my other computer. All right, you have gym in your complex? No, I go to the LA Fitness down the street. But I guess bought a condo on the water here in Fort Lauderdale so I can get a boat, and it has a pool, of course. Okay, so BC and others, I showed you the chart on MU, so now I'm going through my thought process with you. So I want it on a pullback. It's just my trading, my style is just to sell puts because the probability of profit is higher, but I cap my gains. So again, it's the ice cream store, it's different flavors. But I checked earnings, and earnings are fine. Today's low is, above 50.5. I'm just eyeballing it. It's like 50.60. So if you think today's low is going to hold, this is 9 days to expiration, so it's a week from Friday. I could sell this 50.5 put, and that would be naked right here. That's 53, just selling it naked. I would always try to get the midpoint, so I'd make it 54, but I'm expecting a pullback, so I'm not doing it right now. But I'm going to show you what I would do as a spread instead. So I just go down to my strike price. I see what I have to pay, which is reducing my max gain to have the benefit of a spread. So here, I'll just grab this 46.5. So this is a $4 wide, 9-day bull put credit spread. The midpoint right now is 43 cents a share. If I sold a 10 lot, 44 would be $440. I typically am looking for a minimum of 10% of the width of this. So 10% of $4 spread is 40 cents. So this meets that. It's 45 cents a share. So what I'm going to do here before I go to the gym, and it's a little bit risky because I'm doing it, without being in front of the computer. Actually, I'm going to go one strike lower. I'm going to do the 50s. And the reason is because if the stock falls, 60 cents, which it could on the 5-minute chart, then I should still be able to get my 45 cents for this. So I'm going to put in just a 5 lot. I'll scale into it and I'll see if I can get a 10. Well, I'll even do 47. So I want a 12-cent price improvement, and I just sent a 5 lot there. So that's live. We'll see if I get filled later on a pullback. Now, the risk of doing it while I'm away from the computer is, you know, things tank, and then, you know, I got another problem on my hands. But based on everything I'm looking at, it's a calculated risk. CTSH. Yeah, CTSH. Let me show the screen again before I go. He says, hey, there's bottoming tails here. It's coming out from this big consolidation. Yes, it could definitely break out, but here's the only concern I have. There's no big price void. See, the distance from this big base to this topping base is too close. I want more space in between there, like microns. See, there's space here and before you get to this heavy congestion. So that's the only thought on Satish. Look at our Twitter. I see that back at the day. Now, see, I was busy talking or whatever I was doing, but this 15-minute chart gave that retest that I was talking about. Remember we first looked at it? Well, Greg mentioned it when it was kind of coming in hard, and I said I didn't like the velocity. Then it bounced. Then it bounced some more, but reversed. Then it stabilized. On this bar right here, the 1045 bar, that would have been the time that I would have looked to sell these 30.5 puts right here that expire Friday. But I wasn't watching it. All right, so that's it. I hope that helped and gave you a quick crash course on selling spreads and a number of other things. All right, so I'm out of here. Hope everyone had a great morning, and we will be back at 2:30.
I'll be with you guys for a little while. I'm just checking on something here. Yes. Yeah, I want to do that. All right, guys, this is what I just posted in there. I want to see if this closes with a bottoming tail near the end of today. It's got a clear shot at moving up. Doesn't have earnings until the first week of May. So we would need to see this clear these two highs tomorrow, and that should give us a launching pad to move up. So keep that one on the list for tomorrow. Matt, we actually just started the room, and so all the trades that we've been doing, they're in the members area. I'm seeing so much stuff, setups, charts that are setting up to go higher into the end of the week. Of course, that assumes that they hold up around where they are now, and then they move up in the morning above these consolidations. So this Google here, this is what we call a 1, 2, 3 continuation pattern, where you got an inside day after a bullish wide range bar. Well, the trial is right now, Matt. This is what we doing this week. It's not a concern, David. So I'm looking at this as having the ability to get up toward that resistance. Right, it's in an uptrend on the weekly. It's pulling back. Yeah, it came down with a wide range bar, but one of the, I'm a price reader, of course. We look at charts, but I look at details of how the pattern forms, and the concept of bar by bar analysis is one in which you take the individual bars that are forming now and put them in the context of the trend and what preceded it. So this wide range bar down is bearish, obviously. However, once it spends 3 weeks going sideways, that is what I call starting to repair the damage or the uncertainty. So as it goes sideways and forms the support, and it is in an uptrend, so you have to give the uptrend a point. Right? Earlier for week's trail. Matt, email me, Matt, Greg at Master Trader. So once it does that, the bearishness of this bar, right, my interpretation based on what I'm explaining to you, begins to dissipate. So as I look at now the daily chart, I look at the daily chart here, and I see this rounding bottom. And as I look at individual bars, I see it attempted to break down here. It gapped lower here, right? That gap down and a big green bar. And then prices retested it, and it can, the right side of the rounding bottom's forming, and it begins to move up. And now look at these two bars. Every time it dips lower, buyers step up. So what I want to see tomorrow is, can it get through here? So is this resistance a concern? It's an obvious stopping point, but putting that in the context of a weekly trend and everything I explained, my assumption is that it should get through there. Now I'll see how it acts when that happens. And it's no different than what I explained about the spiders in Monday's letter. So subscribers to the advisory letter, what I explained in the video there was exactly what's happening. And what similar to what I just told you on that stock is as to the weekly, this is a little bit different weekly chart, but the analysis here at this bottom. And what I told subscribers on these days when this breakdown bar failure was beginning to form, and I sent out a video on this day, and I said that this looks to me like it could be a turn, and explained what needed to happen. But when it was that breakdown with the small bottoming tail, I said, tomorrow needs to be an inside day, so on and so forth. But I said, based on how this came down, this double top, this is not going to be a momentum move to the upside type of move. It'll be more choppy. And I said, this is going to be the stall area here. And that's what's happened today. And buyers stepped up again. And as we know, the morning went down and prices came down to support. And now they've moved back up. And we'll see what tomorrow brings. Right? So again, assuming prices close as they look right now, today's low will be our first reference point of support. Ideally, we'll see whether it can prices stay in the upper half. Right. So you remember this morning, right? This morning, what I said, any retracement today ideally stays in the upper half of yesterday's range. And it did that. And now it popped back up and we'll see what happens. And so now, if you read on the website, my approach to the markets is what I coined Techno-Fundamentals. What does that mean? Well, it means that I use technical analysis, I use intermarket analysis, and I use market internals. So as I follow the trend in a systematic way, and I'll look at the market internals, which you can see here. And now, so let's push this down a little bit here. These market internals, I see that breadth is reaching a bearish extreme. It's supposed to, as the markets are moving up like this. If it didn't, that's a problem. Now, the put call ratio, you can see this is updating as of today. That line is today's ratio. It's starting to move up here to a higher level, which actually supports the market. So you've got now option traders betting against this market going higher, which is great to see when the market is getting a little extreme here in breadth. So as we put together all of this, provides us a bias, which has worked quite well for a very long time. As I don't know if some of you are new to knowing Dan and myself, but I've been doing this now for 25 years, educating and helping subscribers, even for free. I put stuff out there. The chart of the week is what's happening in the broader markets and market internals and such. Is 2002 new? I don't know what that means, Cliff. What was the trade in DHR that has earnings tomorrow? Your first Pristine course. Yeah, well, we did the first course. I think the first one was like late 1995. And then I did the first TPM2, as it was called, in 2000. DHR. I don't remember DHR. DHI? It was a DHI that Dan was talking about, which we put on a whole bunch of positions when Lennar posted earnings on this day. And then they all started to pull in. So he explained, how we manage that. And, the Lennar, which led the way up, it came all the way back down. So now, we're in this and, managing it and, it's starting to come back up as it comes off of this support. All righty, let's see what else before I take off here. Let's just go through what's trending here. And these oil stocks are just, well, some are stalling. This one has been a little weaker, but still doing well. Halliburton continuing. They're going to pull back, and I'm going to be shorting these intraday, not as swings, but intraday when they roll over. What time zone do you use here? Eastern? That pump continuing to move. This one is continuing. Right. It's been in a power uptrend there on the hourly, and this gap up today so far hasn't rolled over. This might start coming in tomorrow. It's been really strong. So once these turn, thing is for it to see it break some support, and then I look for the 5-minute to roll to the downside and be in a downtrend. EIX. I like it. So it's down here. I must have looked at this at some point. That line is there. So it's down at this significant support point. And so what I like about what it's done here, and this is one of the concepts that I always look for with a wide range bar, is will it consolidate at the top of the wide range bar? I want to see those candle bodies stay at the top of the wide range bar. And it did that for several weeks. And here, you can see this consolidation right there on the daily, and now it's moving up. So it looks good. It looks very good, John. You just now can manage it accordingly, where you're going to put your stop. So at a minimum, you don't have a pivot. So, you put your stop, say, under the base initially here. And if it pulls back, right, ideally it would pull back into this area or not at all. And then you'll see what it does. One sec, guys. this is definitely buyable on a pullback, right? So again, it's where does it pull back to? How does it pull back? It looks good. It's got, it's got room to go higher. Now this is a utility, which is, this came down hard. You have to look at interest rates here. Let's do this for a second. So this was a big reaction there. You want to keep an eye on interest rates. This stabilized. This is the ETF for interest rates. You want to keep an eye on that with this, but the chart does look good. Yeah, GDXJ was looking very interesting yesterday. I don't know why not working. I make notes on things. Sometimes I forget why I did that. I like it. As one of the things that we always try to make the best of is our entry points, and sometimes you're going to miss by trying to make the entry points the best that they could be. So a lot of it comes down to money management, that makes it easier. So I would have no problem to, if you want to buy this with a stop down below the 200 MA, which is where that consolidation is, and then wait to add to it. The way things move in this market, sometimes they just don't pull back. And this has been basing for a long time. So for a core type position, I like it, if you're talking intraday, when you say you are because you're saying 5 minute, but that's a nice consolidation. Yeah, I like it. And when gold started to move up, oh, look at that, right? Remember this, I was talking, I think this is when we first started the room, and I missed the entry on the 5 minute time frame on this day. So I would watch this NEM as a continuation play above those highs. Look at the weekly chart here. So for a swing trade, NEM above those highs. Let's set an alert. Maybe it hits tomorrow. And the NEM has been a leader. I would just go with that one. I mean, I looked at American Barrick, but it's kind of doggy compared to that. Or you can just go with DDXJ, of course. I don't know if this snap will get going and start to follow after Twitter, but I'll just set an alert for next week, for a week, and we'll see if it gets going there. This is not unusual in a bottoming process for prices to fall all the way back to the bottom of a wide range bar. Well, that semiconductor's not turning around. Who uses a BlackBerry anymore? All right, guys, I'm going to take off here. It's getting pretty quiet. Market just going sideways here as we get into the doldrums. See if they can hold on to the gain here. Pointed out the resistance that they're at, and they could just, maybe it's just going to grind up. We'll see what it does here. But good price action today coming back after that little sell-off there, and sideways so far. So you want to see that little blip above the highs there? That, you want to see, yes, it is, John. You want to see that, if that brings any sellers in, because that breakout to a new high and the failure to continue, longs get a little nervous, and sometimes that is what starts a pullback. Right. All right, guys, we will talk later. Have a good afternoon.